Well, happy Monday to you. Thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you. I want to take a look at how our markets are opening up. Let's run through the prices real quickly and then get some expert analysis on the trade as well. Let's go to the corn board first and take a first look here. All right, on the futures trade. On the corn futures, we have that July contract now 3 higher at 375.5. So it's actually a little firmer than what we had overnight. The overnight trade was a couple of pennies higher. We have 375.5 and now 375.25 is our last trade, still within a penny of our high of the overnight and early morning hour sessions. We have the December corn now 2 3/4 higher at 393, within 2 ticks of its high of the session. Now let's look at soybeans. How are they opening up? Well, we have July now 4 3/4 higher at 957 3/4. November new crop 5 1/4 higher at 957. And let's look at the wheat in Chicago. We have July wheat 3 higher at 438 1/4. Now on the Kansas City market, we have July currently trading 2 higher at 440. Both of these are closer to the lows than they are the highs of the session overnight. Looking at the Minneapolis wheat trade, we have the July contract 2 1/4 higher at 558. And for the cotton, let's take a look here at July right now. It is trading 66 lower at 78.79 per pound. However, December new crop cotton 12 higher at 73.57 as they continue to narrow up that spread. Let's check in with Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. He joins us right now. And Dewey, your thoughts on the open here this morning?
Well, you know, my thoughts here, when you look at the corn, up until this point, the market has pretty well concluded that we will get the crop planted on time and that we will be looking at a trend line yield. But, you know, with the rain we had over the weekend and the 6 to 10 day forecast ahead showing that we're going to be looking at above normal moisture and below normal temperatures, I think it's coming to a reality that we're not getting the crop off to the best start in the world here. So I think that's being reflected in corn. I think it's also being reflected in wheat to a great extent. And I think that soybeans are just more or less following those two.
Well, we had higher ethanol production last week. We have a higher crude oil trade this morning as I came into work. And I understand the Dow Jones Industrial Average is also taking off a little higher this morning. What are those markets going to do to impact the grain trade today?
I think that they will be supportive to the markets here, especially the Dow. The Dow, in my opinion, is going to go up to about the 24,000 mark. Then we're going to be looking at a very, very, very hard break in the Dow. And I think that will keep a floor under the grains here for a while.
24,000. Did I hear that correctly?
You heard it.
All right. We'll keep watching for that. U.S. dollar value and the crude oil. Let's take a look at that. Now, on the dollar index this morning, we currently have the June futures down 180 points at 96.840 and September down 210 points. On the crude oil, though, we have been trading a little higher. We have that June contract now 31 cents higher. Last trade at 50.64 per barrel. That's 20 cents from its low of the session. We're about 40 cents off of our earlier high. On the heating oil trade right now, we currently have the June contract now trading at 160.2 per gallon. That would be up basically just short of 2 cents a gallon on the futures trade this morning. Dewey, if you don't mind, I'll bring you back here in a moment, and we'll see how that livestock trade is opening up when we come back. Our guest, Dewey Strickler of AgWatch Market Advisors. We'll be right back. Dewey?
Yes.
I was east of Franklin over the weekend again yesterday, and I saw a field of corn there between there and Portland that was waist high. I about crapped.
Yeah, it's all over the place.
My word, that was some big corn. I don't know how they did that. They must have been in before that cold snap.
Well, they could have very well been.
Seems like most of it's maybe ankle to knee high. let's head back to the phones and welcome back Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And let's go talk about our livestock trade today. Covered a lot of ground on the grain side and the outside markets here this morning. Let's see how we're opening up on live cattle, Dewey. Let's take a look at our first trades this morning. Right now on the big board, we have the June contract 35 higher at 123.80. Remember, we closed all the livestock trade higher on Friday afternoon as the traders went home for the weekend. August now 35 higher at 121.40 per hundredweight. And you have the October contract up 74 cents at 117.42 per hundredweight. Now, if you look at the feeder cattle trade to see how it's opening up today, right now on the feeders, we have the August contract up $1.10 at 151.55 per hundredweight. That's already almost $1.20 off of our earlier low, so a big bounce right off of the bat here this morning. September feeders up $1.18 at 151.40. Now, I do want to take a moment just to remind everybody about this May contract on the feeder cattle. It goes off the board in just 3 days. It goes off on Thursday, and it will disappear. Then the August will move up and take over as the front month. So let's stop there with a higher open on the cattle complex this morning. Were you kind of expecting to see that here, Dewey?
Well, you know, we've got a lot on our plate here regarding the cattle market. We do have optimism that we're going to see increase beef exports to China here. And then on the flip side, we're looking here at the cattle on feed report to see some pretty sizable increase in the placements here. So you sort of have one tugging at the other here. As far as exports to China, that's going to take some time for that to materialize. So I think that being said, we could probably look at the cattle market, try to discount this. Would say that we might see the June contract try to take a stab up here at the 127, but basically I think we're going to go into a trade range here until at least after we see what the placements look like on the cattle on feed.
How long do you think it's going to take before we can bring the June live cattle futures and then the cash cattle market together?
Well, you know, that is a good question. I don't know, you know, how well we're going to be able to do that because you have such a discrepancy there between the two. Got to remember that the futures are really controlled a great deal here by the commodity funds and your professional type traders and black box systems there. So I don't know that you will see them come together that close.
Okay, now let's take a look at how we're opening up in the hog trade today. On the lean hog futures, well, we have the nearbys under just a little bit of pressure. We have June trading 33 lower at 79.17. July down just 8 cents at 80.10 per hundredweight. So it's still over $80. And from what I understand, Dewey, the July contract actually has the most open interest in it right now.
Yeah, that's right, and I would think we will start to see some pressure come because of that here. But in order to break this hog market down, you're going to need to see the June contract try to work back below the 78 mark. Otherwise, it looks like we're going to be looking at some higher values because the trend is definitely up.
Okay, all right, I appreciate that. I know you had kind of a trading university that you had launched earlier this year. How's that going?
It's going well. I've got a few openings here that will be available here in June. And basically what this is, AgWatch Grain Market University is a curriculum which I work with people on one-on-one basis to help them and show them how to improve their marketing results. In other words, they can be their own consultant.
And you can find out more information. Just go to agwatch.biz and learn more there. Dewey, thanks so much. Appreciate it. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. So, Janet, we're off and running, and there you have the open.
Away we go.